Hi friends, Carrie Lindsay here with Bricks Realty, coming at you with March's real estate data. So let's dive in and find out what's going on in the real estate market. So the first thing we'll talk about is interest rates, because that is what everybody has been talking about. And they are still hovering right around 7%, 7.1% right now. Basically, that is because the Fed has decided at this point not to cut interest rates, because they are still waiting to see if inflation is going to continue on a downward trend. So no relief expected until probably, analysts are saying, the June timeframe. So we are expecting a decrease, but it's probably not going to come as soon as what we wanted it to come. So I will tell you that one of the reasons that the interest rates are higher is because, again, of inflation and the higher yield that investors on the 10-year treasury are requiring in order for them to take that risk, right? So they're demanding a higher yield, which keeps that 10-year treasury rate higher, and the mortgage interest rate follows that. So as the treasury yield goes up, it's a really hard word to say. As the treasury yield goes up, mortgage rates tend to follow that. So again, if inflation goes down and they can continue to see that decreasing over the next few months, then we are expecting the treasury yield to go down, which will drive interest rates down. I hope that made sense. If not, DM me below and I can explain it. I can explain it better. The next thing I want to talk about is foreclosures. I don't talk about this a lot because, again, we don't have a lot of foreclosures. Our foreclosures across the nation are actually 40% below pre-pandemic levels. So they're really kind of a non-issue. We're not going to see a flood of foreclosures that hit the market. At least that's not expected now or in the near term. That would help our housing inventory. So foreclosure starts are down about 17% year over year, as well as foreclosure sales are also down 17% year over year. And I'll have some graphs that will accompany these slides that you'll be able to see. So home appreciation. Let's talk about home appreciation. The final numbers have come in from Case-Shiller, CoreLogic, Black Knight, Freddie Mac, and Fannie Mae. And basically where they've all landed, they've landed somewhere between 5.5% and 7%. So if you kind of average those, we're landing on, home appreciation for 2024, for 2023 to have been around 5.5 to 6.5%. So that was better than what people suggested. They thought that appreciation for 2023 would be flat, and it's come in. They're thinking it's going to have finalized around 5.5 to 6.5%, depending on how the companies did their individual algorithms to come up with those calculations. So home prices are not decreasing, folks. They're still on the rise, and specifically here in Florida, they are on the rise. Our median home sale price, both in Destin and in Pensacola, the sale price was down 2% year over year. I will tell you that. Closed sales were also down year over year in Destin by 19% and in Pensacola by 16%. Our days on market, which is how long it takes from the time that we list a property on the MLS until it goes under contract, increased in the Destin area 127% year over year. So it went from 11 days to 25 days. And in Pensacola, it's up 262% year over year, from 8 days to 29 days. Now, what I'll tell you is before the pandemic, anywhere from 2 weeks to 30 days was about the average time to sell a house. So what I would tell you is that we're stabilizing in our market here, and that's a good thing, right? So if you got your home priced correctly, your home should sell relatively quickly, usually within the first 30 days. New listings are down 11% in Destin year over year and down 27% year over year in Pensacola. Sellers are holding on to their properties, and the reason for that is about 70% of homeowners out there have a interest rate below 5%, and about 30% of the 70% have an interest rate below 4%. And then you have about 13% that have an interest rate below 3%. So you can see that the majority of the population of homeowners out there have an interest rate that's lower than our current going rate. And so if they were to sell and need to buy another property, they're going to be selling a home where they have a lower rate to get into a new home, most likely bigger, right? Which is going to mean a higher interest rate and thus a higher mortgage payment. And so that's why some of the sellers are sitting on the sidelines hoping that interest rates come down so that they don't have to take that big hit in the interest rate. So we'll see how that turns out. I'm not sure. Our months of inventory, so how many months of inventory if we sold everything on the MLS, what does that look like? A balanced market is about 6 months of inventory. That's where kind of buyers and sellers are on an even playing field. Months of inventory is up in the Destin area 65% to about 3.8 months of inventory, and it's up in the Pensacola area 33% to about 2.4 months of inventory. So we're still really low. It's still a seller's market. My outlook, what do I feel like is going to happen based on all of the data that I follow, all of the analysts that I follow, and all the news that I read? So mortgage rate projections right now should be in the low sixes between second and third quarter, and projections show that we could be below 6% by fourth quarter. And when I mean below 6%, I'm talking like 5.9. So not extremely below 6%, but below 6%. That's basically what the average has turned out to be. So regarding home prices, my outlook on home prices is that, as mortgage rates hover in the 7% range, it's going to be difficult to convince existing homeowners to move because they have a lower rate. We've already talked about a better rate environment as we go throughout the year, and I think that we all have experienced the lack of inventory. So as we get into a better rate environment, more demand will come to the market, and I think we will have another year of price gains in 2024. I think home prices are going to continue to go up. So my conclusion is the demand for Florida real estate is exceedingly strong, and it has been for the past few years. But as we are approaching the 1st of April, we are undergoing a healthy rebalancing of our market due to the higher interest rates and the increased cost of borrowing. Our home prices are still hovering near all-time highs. And if you combine that with higher rates and rising home insurance costs, buyers are becoming more challenged with overall home affordability. That's just the reality of it. So again, with so many people moving to Florida now and in the past recent years, this has caused housing prices to rise because we have more demand than we have for supply, and that's happened in a relatively short period of time. The strong demand has also caused the amount of homes for sale, often referred to as available inventory, to remain low, below that 6-month mark that we like to see, which is what I talked about. Additionally, as the majority of Florida homeowners have a mortgage rate well under the 7% rate, many sellers are choosing to remain in their current home with their low monthly payment versus taking on a higher payment at a higher rate. And so this means fewer listings hitting the market each month. We do continue to see sellers who do need to sell, right? We see them offering seller concessions. We see them offering rate buy downs, and we also see some reductions in list price. We're no longer in that market where you can slap a price on it and it's going to sell and the buyer's going to go over, $10, $20, $30, $50,000 over asking price. We're not there, and we may never be there again. So sellers have had some adjusting to do to get used to that. And if their homes are sitting on the market and they need them to sell, then they are willing to do some concessions. So please just know that if you are a buyer. New construction, they're kind of experiencing the same thing. They've experienced a pullback in customer demand because of, again, the higher interest rates. And so some of our national home builders, D.R. Horton's a big one here in our market, they're offering wonderful incentives. They've got better rates than typically you can find with a regular mortgage broker if you use their in-house lender, DHI Mortgage. And they are also offering buyer closing costs to be paid if you use their mortgage lender. So if you have questions about new construction and you want to go see a new construction home, please reach out. I've got some great contacts there. And as well as other builders in our area, a lot of them are stepping up to the plate to try to help buyers out in this situation. So again, not all good news, but not all bad news. I think that we're going to see, hopefully in the next couple of months, things kind of shake down a little bit, where we'll have a better idea of what we're going to look like in, going into the end of the year, and hopefully that's going to be with lower rates. So again, whether you are buying or selling, whether you just have questions about the real estate market, I'd love to be your advocate. I'd love to be your resource. So please just give me a call. My number is 913-638-7767, or DM me below. I'll also put my contact information down there, because you can text me, you can reach out on social media, you can send me an email, whatever, send a carrier pigeon. I'll answer. Anyway, I hope you guys have a great day, and I hope you found this helpful. See ya.